How to buy a house in 2023, or how not to buy a house in 2023. Listen to the story. This house is a lemon. Bought a 4-bedroom home 40 minutes outside of San Diego for $730,000. $31,000 over asking after losing out on 7 other homes. They're now dealing with $20,000 in repairs. Did we have a choice? You actually did have a choice. They had been living with a friend and needed to move, whether it be renting or buying. Knowing that interest rates were expected to rise, which would price them out, they made a decision to buy. We did what we could to get the best we could. It's costing us 55% of our income, and it sucks to have no free spending money, but at least we have a roof over our head. There are a ton of these stories, these buyer remorse stories happening all across the internet, on Reddit and on different articles. And in today's video, I want to teach you all how to buy a home in 2023 and not make these same mistakes that these buyers made this past year. As I stated in a previous video, in 2022, most people who bought a home this year are now underwater, meaning the value of their home is lower than the amount they owe on the house. And as we roll into 2023, with the economy having a lot of uncertainty and interest rates probably going up a little bit, I want to suggest some ways that you can buy a home in 2023. Now, going back to the story, there were a few things wrong with the story that I want to point out that you can avoid doing. But before we go on, please be sure to like this video, subscribe to this channel for some more content around real estate, the economy as a whole, and the housing market. So number one, in the story, they mentioned that they went over asking. Most experts believe that home prices will decline in 2023. With interest rates going up, they know that there's not as much of a buyer's pool out there. And so a lot of agents and sellers know to appropriately price their homes. They're not going to price them and expect them to get an offer over asking or even close to asking, depending on where they actually put their asking price. So most people would be able to get a property at least at asking price in 2023. And that was their first mistake. So make sure you're able to submit an offer that fits your budget, that you can pay asking for or offer below asking. Another thing they mentioned was that there was repairs. They felt like they didn't have a choice, when yes, you do have a choice to say no to buying a home. Yes, you probably had to move in this story, but you didn't have to buy that house. You did have a choice. And now they're spending over 55% of their income. So throughout this video, I'm going to give you all a step-by-step guideline on how to buy a home, just learning from different stories like this, so you all can have a better outlook on the economy and the housing market, because I have been making a lot of housing market crash, economic crisis videos. And so I kind of want to make a more positive theme video and show you all, yeah, you could still buy a home. You can still buy your first rental property this year in 2023. So the first step I want to talk about is budget, and that coincides with patience, being patient. So don't feel rushed to buy a house, either by your lender, by your real estate agent, by your landlord, by the economy, by what news outlets are telling you. Be patient, work at your own time. Not only work at your own time, work on your own budget, right? Buy a house within your budget. Now, according to most experts, you don't want to spend more than a third of your income on housing expenses. So let's say you make $10,000 a month. According to this rule, you do not want to spend more than $3,300 on housing expenses. So that includes your mortgage, your taxes, property taxes, your insurance, your interest payments, and all other housing expenses. And with the uncertainty of 2023, I would put that ratio even lower. I recommend people not to spend more than 25% of their income on housing expenses. So if you make $10,000 a month, you don't want to spend more than $2,500 on a mortgage. So if you can stay between that 25 to 30% of your household income, that will set you up so you don't have to feel like you're breaking the bank buying a house. The other thing you have to consider with buying a house in 2023 is if you're buying a house, let's say you're looking for a house January 1st, 2023, and the Fed is raising interest rates. Well, you have to understand that most likely the banks are going to raise their mortgage rates. And so even though right now mortgage rates are quoted around like 6.5%, maybe by April or May, that may go above 7%. So you have to tie that into your budget so you can stay within that threshold of between 25 and 33% of your income. The other thing that you have to consider with your budget with buying a house in 2023 is the repairs and maintenance. So you have to fit that within your budget. Let's say you're looking at a house and you know that it needs some repair. Just fit that into your budget. Just set aside the amount of money that you know is going to cost to spend money on fixing this specific repair. Now, if that's your thing, if you're okay with buying a house that you know needs some minor repairs or even some major repairs, you just have to fit that within your budget, knowing about like labor costs and material costs going on right now in the economy. The other thing is, if the house is doing fine and there's no major repairs that you need to fix at the moment, you still have to set aside some money for maintenance. Maybe you have to clear the gutters, or maybe you need to paint a room or replace carpet every now and then, or maybe you have a leaky faucet 6 months down the road and you have to call a plumber. So it's always good to set money aside in your budget for maintenance on your property. The second step is to get with a lender. Find a good lender. And I recommend people, actually, number one is working with a mortgage broker. Mortgage brokers are able to shop around on behalf of you. Essentially, they look at different loan products by different banks and loan offices to find the very best rate, or just what fits what exactly you're looking for. And so it's different than going to Bank of America or Chase, these big banks where you're essentially only using their loan products. A mortgage broker will shop around. They'll look at Bank of America. They'll look at your loan officer down the road from where you live, and they'll look at regional offices too. And so they're able to shop around and find the best rates for you. A good website where I found my mortgage broker is called findamortgagebroker.com, and you can look up your city and find different mortgage brokers in your area. And you have to be sure, you have to call them and make sure, hey, so what exactly do you do? Are you shopping around at different banks? What do you do as a mortgage broker? Because sometimes they say they're a mortgage broker, but they're actually working with a business or a home loan service company, and they just use their specific loan. So make sure you find one that looks at different companies. The other thing with finding lenders is essentially finding a mortgage, or knowing how much you're going to be able to qualify in order to buy a house. And that goes to the first step of budget. And so your lender will be able to see your income, and going back to the income of $10,000 a month, your lender will actually read your 1040s, your W-2s, to make sure you're actually getting in $10,000 every month. And they're all like, okay, well, we can qualify you for this amount based off of your debt to income ratio, your credit score, and other factors relating to your qualification for a mortgage. And most people getting mortgages are either getting it from like the government, like FHA, VA loans, or USDA loans, or conforming loans, which are conventional loans, which is usually backed by Freddie Mac and Fannie Mae. And all of these different type of loan products usually have limits, and FHA is a great first-time home buyer loan. You can put as little as 3.5% down. If you have some issues with your credit or you have a higher debt to income ratio, you can still qualify for those type of loans. And the thing is, these type of loans do have limits. So the FHA loan limits for 2023 is $472,000 for a low-cost area, which are most areas in America, up to 4 units where you can get a loan as high as $907,000 for quadplex, and only put 3.5% down. Isn't that crazy? So right now, I can look for a property that is close to $1 million, over $900,000, a quadplex, and I can put as little as 3.5% down. I can live in one unit, even rent out a bedroom, and then rent out all the 3 other units if you're looking to supplement your mortgage in that way. And of course, it goes higher with high cost areas such as New York City, Chicago, San Francisco, LA, areas like that. Those loan limits go much higher. And that's only for FHA. For conventional loans, it is much higher. The baseline conforming loan limit starts at $726,200 for 1 unit and go as high as $1,396,800 for 4 unit, and that's conventional loans. The thing with conventional loans is they do require a higher credit score, usually above 620, and they require a lower debt to income ratio. But the good thing about conventional loans is if you're able to put a larger down payment, you don't have to pay mortgage insurance, and also you get a higher loan limit. Now, talk about lenders lenders a little bit more, a great place to find mortgages are just talking to your real estate agent or just looking at regional loan companies around your area. So I found one around my area and they were just on top of everything. They were quick with giving like papers to my title company, to my real estate agent, and they were able to just help me out throughout the whole closing process, because obviously they're trying to close the loan also because they want to get paid, but they were just on top of everything. And I think if I went with a big bank, and I hear stories from people who got loans at these big banks and just the process just dragging so long because they're being so slow with their process. But if you're able to find someone who's local but still has different branches and offices where they still give you that conveniency, and they're big on technology but they're not super small where they're a little slow with technology, or they're so big where they're out of touch with you, it's just finding that middle ground for your lender is great. And that worked out well for me. The loan company I use is just a suggestion. It's called Caliber Homes, and it goes by a loan officer, I guess, case by case basis, because you may have a great loan officer from them or you may not have a so great loan officer from them. So it just depends. But there are other companies like that around your area. But you can also use a mortgage broker, like I stated earlier, where they look at all the different loan products from the different companies. All right, number 3 is to find your real estate agent. Real estate agents are important, but don't let it be the end all be all, right? Don't think the realtor is supposed to do absolutely everything for you and you don't do anything yourself, right? Like, you don't see the house yourself. You don't read over the inspection report yourself. You don't look at the neighborhood and look up the zip codes and research articles about the town if there were any recent crime in this specific area. You have to do research for yourself. When I worked with my realtor, essentially I was bringing houses to him. I was saying, hey, I like this area. I saw this house listed. Let's go see it. And yes, he did a bunch of things for me too and brought me houses also, but I did my own research, and I recommend you all to do that for yourself. You know, make sure you know how many bedrooms you want, how many baths you want, the area you want, and do your research. Don't trust completely in the real estate agent that you're working with. And yes, you can find some that are 100% trustworthy, and most of them will give you good recommendations and things of that nature. I don't want to paint them in a bad light, but you have to make sure you don't get caught up like people did during the pandemic, where these agents were pressuring people to get into houses that they know they really couldn't afford because they wanted to make a commission. But I still think, especially buying your first home, working with a real estate agent is great because they help with the paperwork, they help with finding houses, touring houses, and asking questions to the other agent because they're more willing to talk to other agents more than just a buyer themselves. So I think that's a great way, and they just help with the process. So I still recommend you talking and working with a real estate agent. All right, the final step that I want to talk about is the inspection. In a lot of buyer's remorse stories over the past 2 years, you have people not going to the house to view it because it was states away, and they enter a house and the floors are unlevel. Like what? Like your agent looked at the property, an inspector looked at the property, and they never stated to you that, hey, the floors are unlevel. So it's so important, especially if you're moving out of state in 2023, to go take a flight, look at the property yourself. You know, I like to make sure the foundation is steady. Look at the roof. If you see any water spots in the ceiling, things of that nature, smell it. If you smell any moisture or water damage or things of that nature, make sure you walk the property yourself and read over the inspection report and go over it with your inspector. And the thing is, with inspections and inspectors, they're in a weird predicament, in a weird situation, because if they don't give a good on a house, or like give a good rating on a house, essentially a buyer won't buy that house. And so the agent is not going to get paid for that house. And so most likely that agent will not go back to that inspector, right? But if the inspector does pass it and the agent gets paid, most likely that agent will return to that inspector and now bring more business to that inspector. And so the inspector is in a tough situation because they're trying to please the agent, and at the same time they're trying to please the seller, making sure they're able to live in a healthy and a great, stable, good condition property. And so you just have to make sure you look over the inspector, and also do research on inspectors yourself. Don't only trust the inspector that your agent is giving you. All right, I hope you all enjoyed this video on how to buy a home in 2023. Let me know how your journey is going if you're looking to buy a house. I think even though we're entering 2023, most likely currently in a recession, I still believe this is probably one of the best times to buy a property because home prices will decline some and you're going to have more of a leverage. You're going to be able to submit an offer lower than asking. You'll be able to negotiate with the seller to pay for this repair, for that repair, to pay for your closing costs and things of that nature. So make sure you still keep your eyes open, but don't rush into anything because yes, there are uncertainties in the future. So you have to make sure you have good cash reserves and you're not getting yourself in a weird situation where it's probably better off renting than buying. All right, hope you all enjoyed this video. Be sure to like, subscribe, comment down below, and I'll talk to you all later.